I'm Priscilla Barrera with the Investing News Network, and here with me today to talk about the battery metal space is Chris Berry of House Mountain Partners. Chris, thank you so much for joining me today.
Thanks for having me.
All right, so in the past few months, we've seen battery metals prices increase. Obviously, interest is on the rise again for battery metals. I wanted to start by asking you what specific trends this cycle has had that we didn't see back in 2017 and 2018 when prices for battery metals were also on the rise.
Well, I think, some of the trends that were in sort of process, if that's the right way to think about it, or underway in 2017, 2018, have only gotten stronger. Of course, I've been pounding the table for years about this idea of cost deflation, where batteries continue to get cheaper, which they do on a dollars per kilowatt hour basis. And so, that trend has continued, hasn't accelerated, but it's been consistent, number one. And number two, I think, is just sort of the focus on, or I should say the focus by governments in terms of decarbonizing economies, or this idea of building back better. So I think that, probably the two biggest catalysts, again, today relative to 2017 were the US-China trade war and its sort of effects, or I should say maybe an awakening on supply chain dependence, number one. And of course, COVID is the other, I think, really large shock to the global economy. I mean, that is more than anything, I think, really responsible for all of this discussion these days around stimulus and around the greening of the global economy.
Right. So I did wanted to ask you about government roles. And to start, we could say that demand for battery metals could be out of the question by now. Most people would agree that a demand will increase, but the scale up of supply is still something to be seen. What role do you think legislation and governments should play in incentivizing new supply and securing raw materials? And do you think North America in particular is moving in the right direction?
Yeah, I think that, we in the West, okay, we're never going to be able to compete with China by playing their game, right? Sort of a race to the bottom, lowest cost producer always wins. Environmental standards kind of take a back seat. We have to innovate. And so the way that the West builds out supply chains, and the role to, specifically to your question, I think the role that governments play really revolves around funding research and development. Now, whether or not that's around extraction technologies or, doing basic things like tax breaks or low interest loans. I mean, there are a lot of different ways, I think, for government to be supportive of building out critical material supply chains without actually getting involved.
Mm-hmm. All right. And last week, we also saw a report from the International Energy Agency warning governments about this possibility of shortages of raw materials for this clean energy transition. What are your thoughts on the report? And was there anything there that you were not expecting to see?
Look, I mean, I've seen a lot of these different types of reports and the numbers are staggering. I don't know how we're going to be able to mine and refine and produce enough raw material, whether or not it's lithium or copper or nickel, in time to hit some of these goals where we want to manage, global temperatures. I think the real paradox in all of this is we talk about decarbonizing and the greening of economies. It's really a paradox, right? It's the paradox of green growth, as I call it. So we're not going to need less raw material, we're going to need more. And recycling and thrifting aren't really going to be able to bridge this enormous gap that could emerge if we really do start to electrify the economy. So, there wasn't a heck of a lot there really that surprised me. I guess I'm glad that we're starting to see a lot more interest from, the government and also the private sector on just the enormity of the challenge ahead of us. But it really starts, I would argue, with funding the upstream portion of the supply chain. That's where it all starts.
All right. And one of the things they did warn, or actually they called for governments to sort of potentially stockpile battery metals. And that was sort of interesting for me to see. Do you see that as a feasible way to secure supply? And does that change depending on the raw material we're talking about?
I mean, it's a way to secure supply, but it's also a way to drive up prices because you create artificial scarcity in the markets. So if you want to natively impact battery economics, go ahead and stockpile away, so I don't think it's a particularly great idea, to be honest with you, just from what I think it would do to pricing.
All right. And I wanted to also ask you, of course, about investment, which is something that the industry has been talking about for a while, the need for investments in this space, in the battery metal space. Could you maybe give investors that are watching today a bit of an overview of where we stand today compared to maybe back in 2017 and 2018? And where do you expect more money to come from?
Yeah, I'm really encouraged when I see the amount of investment coming into the battery metal space. I mean, you've seen, just on the lithium side, you've seen Albemarle raise over $1 billion in equity, SQM do the same thing. There's a recent merger between Galaxy and Orocobre, so there is some M&A activity here, I think, kind of percolating. And I think that's a way, that's sort of the realization that this next wave of producers, how they kind of grow and compete. To say that one company raised $1 billion in the lithium space, I mean, back in 2015, 2016, 2017, we would have only dreamed about having that much money come into the space. And now it's sort of happening on a company by company basis. So, again, when you look at the CapEx of a new brine operation or a new hard rock operation, yes, you're going to need many more hundreds of millions, if not billions of dollars, again, just to get to pretty conservative EV penetration rates of, say, 10% by the middle of this decade. So we're on the right path, but there's a lot more that needs to be done. And that's always been the challenge, I think, with lithium and some of these other battery metals in particular. It's like, yes, the markets are growing at 20+% per year, but they're very small. So obviously lithium is very small relative to copper or relative to nickel or manganese or something like that. And so, beyond the typical Chinese strategic player, where does the capital come from? I mean, is it going to come from oil and gas? Is it going to come from major mining companies? I'm not sure. I think Rio Tinto getting involved in the scandium business and the tellurium business was really interesting to me, because we think lithium is small. I mean, scandium is like 15 tons a year. It's nothing. So it was interesting, I think, to see a large diversified mining company like Rio Tinto kind of pivot to a certain degree, or at least get exposure to where the high growth in the battery business and the energy metals business, I think, is going to be going forward. So it's gonna be a mix. It'll be the traditional, I think, private sector and banks that will provide a bulk of the capital. I actually think companies that have a focus on ESG and sort of decarbonizing their own supply chains are actually going to be in line for a fair amount of low-cost capital going forward as well. I think that's one of the other things that's really changed in the last couple of years.
All right, and we will talk about ESG in a moment, but I did wanted to bring it back to building out supply chains. And this is the topic that you've been talking a lot about, which is the regionalization or building domestic supply chains. In North America, what do you think is going to be the biggest challenge for the region?
Well, I think that you've got a lot of competing interests, right? You have the environmentalists and you have the mining companies, and then you have the downstream sort of multinational players, the cathode manufacturers and the battery manufacturers. And, certainly for the miners and the battery manufacturers, I mean, they are publicly traded in some instances, entities, they're companies, and they exist to deliver a return and a profit to their shareholders. And that, of course, isn't necessarily copacetic. That goal is not ideal or copacetic with respect to what the environmentalists think. And so, I continue to foresee a lot of tension around how much capacity gets built, not just in the United States, but in North America. And I'm not saying that we should ignore environmentalist concerns at all, but I just think that it also really shines a light on how important ESG is and is going to continue to become going forward.
Right. And obviously North America, it's building its supply chain, but also we have Europe doing this clean energy transition. We have Asia leading. What lessons can North America learn from these regions in terms of building its own supply chain?
Well, I think, back to your original question, what's changed between 2016, 2017, and today? And I think that with respect to battery metals, we always sort of looked at it and said, okay, it's China versus the rest of the world. And that has completely changed now. Clearly, the European Union has committed to spending, I don't know, a trillion euros on their own Green New Deal. And obviously, a part of that is an EV, a self-sufficient EV supply chain. So I think one of the biggest differences between a few years ago and today is that the United States, or let's just say North America, is not just competing against China for resources and intellectual property and also talent. We're also now competing with the European Union, which is an ally of ours. So it's not like a strategic adversary in the same way. But the implication there is that resource prices, raw materials prices are likely going to rise because high quality assets are going to become more in demand, as is intellectual property, which is why I'm really interested in technology. And also just the intellectual firepower in terms of how to build these projects and how to leverage technology. So I see costs, quite frankly, increasing for a lot of the mining companies, a lot of the companies along the supply chain going forward, unless they can leverage technologies.
Right. And is there any particular technology that you're interested in? Is there anything that you're watching right now?
Yeah, I mean, I've been really interested in just the general sort of thematic of direct lithium extraction technologies. I think one of the challenges there is most of them are black box and not yet scaled up. And so that has given investors, I think, pause to try and say, okay, well, which one works and how does it work and what are the true costs and the true economics? There are some market leaders there for sure. And so we're starting to learn a lot more about potential costs. I'm also spending a lot of time these days looking at technologies around the cathode and the anode, and in particular, driving down materials costs utilized in each of those. And so, a company like Nano One, I mean, I think a lot of people that are going to watch this are aware of that company and what they're doing. I'm long the stock in terms of, full disclosure, but I'm long the stock because I think it's a great example and a case study of how a company can take different quality resources and lower overall input costs into the technologies.
All right. And I do obviously want to bring it back to the ESG. And you mentioned this a few times now in the interview. So just wanted to know what are your thoughts on ESG and how it will impact battery metals projects going forward and investments. And in your opinion, how much attention should investors be paying to this factor today?
I think it's a top priority, which again it's not that in 2016 or 2017 it wasn't a top priority, but now it clearly, and I think a lot of that has to do with just governments really getting behind the decarbonization push and just a lot of technologies out there, which I think can really help. So, I guess my sense is that in an ideal world, you would have a lithium mine, we'll just take that as an example, that had the lowest possible carbon footprint you could think of, from extraction to purification all the way down the supply chain. And I think that is going to attract low cost capital because that's what everyone is after. You've seen a company like Sigma Lithium actually execute that business model. And so, I think that it probably provides a pretty good case study for a way forward for the lithium mining business. Of course, the brine operation is slightly different, but again, that's where direct lithium extraction technology could possibly help.
All right. My last question for you today, Chris. When looking at this electrification theme and battery metals investment thesis, what mining projects do you think will win in this decade? And maybe if you can leave us with a suggestion for investors looking into the junior mining space in 2021.
I mean, look, at the end of the day, it doesn't matter what the metal is, it doesn't matter what the source of the material is. I mean, you've got to be at the low end of the cost curve. That comes from having an asset that is, of course, high quality, low impurity, and then obviously in a reasonable geopolitical jurisdiction. I've always maintained that whether or not it's lithium or cobalt or vanadium or what have you, if you really want to scale out and a player, you've got to have a partner. Okay. And ideally that partner brings a blend of technical experience and of course a larger, balance sheet as well. And so, look, there are a number of examples out there, but I think that that's just the way that you survive and you thrive, not just as an investor, but of course as a company as well. I mean, the lithium business is still very fragmented. There is not a lot of pricing transparency, and so having access to technical talent and also flexible and large balance sheets, I think, is the way forward.
Right. Thank you so much for joining me today, Chris.
Thank you.